Thank you for joining me on this learning journey. So today we're going to be taking a look at an intro to stocks. So you may have heard adults around you talking about the stock market. And today we're going to be just taking a glance at what stocks are, how you make money from stocks, why a company may choose to open up a portion of their company for you to buy in the form of a stock or in the form of a share. So what are stocks? Stocks are small shares of a company, so that means you own a small fraction of that company when you buy it. So as the company goes up in value, your small portion does as well. So why might a company choose to go public or to open up a portion of the company for investors? So companies might want to do this because they need capital, so they need money or capital to grow their business. And they want to go public instead of, they want to open up a portion of their company for investors instead of taking out a loan because, they don't want to deal with having to pay interest, and loans are liabilities and can lead to debt, and they don't want all that. So they decide, okay, I'm going to go public and open up a portion of my company for investors. So how do you make money from stocks? So you can make money with dividends, and we'll be talking more about that later, but dividends are basically when the company gives all of its shareholders. So once you invest in a company, you are now a shareholder in that company. And that basically means that you own a share in that company. We talked about shares are a small portion of that company, so you are now a shareholder. So dividends are when the company decides to pay their shareholders quarterly, semi-annually, or annually to reward them for being an investor, and also to encourage them to stay investors and to invest in their company. And that's one way to make money from stocks, is if the company gives its shareholders, say, 20 cents quarterly per share. And in the real world, you usually don't just buy one share in a company. You would buy, say, 100 shares, and you could make money from stocks that way through dividends. Or you could sell the stock after the price increase. So I have a little graph here, very simplified hypothetical example, but anyway, let's say that the stock price goes down all of a sudden, and you decide, okay, I know that it's going to go back up in value sometime soon. So you would buy it when it's low. Let's say it was $5, and then once it shoots right back up, you sell it. Or, of course, it's up to you and your strategy, but let's say that in this example, you decide to sell it at that point, and you earn $15 per share. The stock price is at $15 per share when you sell it. And let's just say you sell all of your shares in that company. So you just tripled the amount of money you paid for it. So you got a 200% increase from that $5. So that is amazing. That's amazing ROI in that case, return on investment. So again, simplified example. But still, that's another way to make money from stocks, is by selling after the price increases. Now, stock prices do change rapidly, and for that reason, investing in stocks can be pretty risky. But there are quite a few things that we can do when it comes to trying to minimize the risk of trading in the stock market, and we have only just scratched the surface on stocks and investing in stocks. We have only just begun our learning in the stock market world. So that's it for this learning. Thank you for joining me. I'll really appreciate it if you leave your comments, feedback, and further suggestions for additional learnings below. I'll see you in the next video.